Good morning, everyone. Let's go ahead and take a look at the stock charts, try to find some trade ideas, and hopefully we're able to make some money and find some success here. If you're new to the channel, leave me a thumbs up, and if you've been with me for a while, leave me a thumbs up as well. I do appreciate that. All right, let's get into it. Seeing a couple breakdowns, and I want to just point out what I'm seeing right now. It might start to trigger some trades, so I want to just point it out now before it's actually happened. So you got here Nasdaq futures. Look, we have this bearish rising wedge right here, and it's basically, we're starting to break it. It's basically right here. You can see we've got a reaction low, reaction. They stepped in early. We had another reaction here, and now we've broken it here. It was impulsive, kind of, except there was no follow through, and so it's still grinding around. This could be a false breakdown or some sort of a little whipsaw, or it could just be the pause before it actually really wants to break down. As of right now, that is a breakdown of this wedge. But again, I like to see impulsive price action when you get breakdowns. You usually want to see consensus that the market is exiting positions and selling off. So that's not what this is. So we'll have to continue to just watch it. It's not really a trigger or a sell trigger basically to short, but we'll watch it. Here's the SPY futures, same thing. They actually broke down. Here's the bearish rising wedge they were in, and they broke down the other day, but again, just drifted sideways. And because the Nasdaq futures hadn't broken down, they didn't really go anywhere. Again, these won't go anywhere without tech. If tech doesn't sell off, SPY's not going to sell off. If tech doesn't move higher, SPY's not really going to move higher, not substantially. You can move marginally higher on some of the other stuff, and it's doing a kickback rally. So maybe that's what this wants to do, is do a full kickback rally up here and then reject. Again, until we see that impulsive breakdown action, it's not something that I am gonna just load the boat short on. And I'm just continuing to watch it, basically. Let's look at the triple Qs. And so the triple Qs hasn't broken down yet. So here's the bearish rising wedge the triple Qs has been in. And again, we're looking at short-term time frames. This is hourly charts here. And, hasn't broken down yet. So the futures are starting to break down. Not impulsive, but they are starting to break down. And the indices haven't broken down yet. What that could mean, potentially, is the futures want to run up and do a back test and then fail overnight tonight, and then the indices will gap down tomorrow. The ETFs will gap down tomorrow. That's a potential. All right, I just want to lay that out. And SPY, you can see they started to break it down here on the hourly, but the buyer stepped in and recovered it. Now remember, this is a bearish rising wedge, so this should fail to the downside. And so the recovery here is likely just market makers playing games. I would expect, even if they want to pop it up to the upside, I think eventually we're going to break down to the downside. If they want to pop it up to the upside, it'll just be a marginal, most likely, just kind of hang around up there, and then it'll break down. But again, another scenario, like I laid out, maybe the futures sell off tonight and we gap down. Small caps, IWM continues to work its way higher. So I think a lot of the hype and speculation out there right now that I'm seeing is in these little no-name small cap stocks that just are going from worth nothing to shooting up 400 or 500% in a week or two. And I think a lot of that's taking place in the small cap sector. But the thing is, when I look at the small caps, I can't make a bear case on the small caps IWM ETF. We don't have negative divergence here on the daily chart. It's in general, I just see it's bullish price action, bullish momentum, and nothing has changed. So until we start to put in some sort of negative divergence across some time frames, it just looks bullish to me. TLT, Treasury bonds. It's always important to look at the bond market. This is where the big money plays. For the most part, big hedge fund managers, big fund managers, they put large amounts of money to work in the bond market, and so you want to understand where that big money's, what that big money is doing. So I always keep an eye on the bond market, and the bond market has bullish divergence on the daily chart. You see it right down here. continuing to make bullish divergence. We made a new low, marginal new low just recently, and that was a divergent low. And we continue to, make bullish divergence. Now, I'm probably going to wait for a break above this level right here, which it looks like about dual resistance. If we get it soon, I would say a break above this 161.20 area. That should set us up for a move, basically to the upper end of the range, probably up around 172. And, it's not a huge move, but bonds don't usually move that much. It's about a 7% gain. So I'm watching for that. That's a trade idea. They're, waiting for that to trigger basically. But the setup is there. It's bullish in the indicators. Okay, gold bullion, you can see we're right at resistance. So this is trend line resistance. On the daily, you can see we this downward trend line. And this trend line's it's been validated with lots of different data points. You can see we had a rejection there, right there, another rejection there, another rejection there, another rejection there. This was a bull trap. So that also helps validate the trend line because it broke out and then impulsively sold off, ran up, rejected right back at resistance, and then sold off all the way down to the major support. So that helps validate that trend line, seeing that bull trap take place around that trend line. And you can see today we've come all the way up to trendline resistance. So we're probably going to get a reaction here. I think that's likely that you get a sell-off or some sort of a reaction. And then it'll be, you'll want to watch to see what happens. Is it a muted sell-off? Do we sell off and undercut the recent lows, and put in bullish divergence on the daily chart? If we sold off on gold bullion, let's say we sell off all the way back down and make a slightly new low. I wouldn't expect it to go much below 1770 or somewhere right in there. If we do it quickly, we could potentially put in bullish divergence where the RSI would look something like this. If I can get the line there, it'll look something like that, maybe like that, and we'll have a new marginal low with bullish divergence. That is a very bullish setup. And so that would be, I would likely be very interested in adding to a gold position. Gold miners is typically how I trade the gold trade. And then I would expect, maybe we build energy down there, and then I would expect an impulsive breakout above this downtrend line and off to the races we go. So that's a potential scenario that might play out. We have to continue to watch it. If we don't, and we just break out, there could be a breakout here. Momentum's clearly there. You can see we've just been moving higher every single day. One slight flat day basically, but moving higher every single day, and momentum is clearly to the upside. So we might just break out and go off to the races. In general, I'm bullish on gold. Gold's in a bull market, so. Okay, let's look at the dollar because this will have, this is important to watch if you want to know if the market's going to sell off or not. So what we have on the dollar on the daily chart is bullish divergence. It's intact right here on the RSI. This is a big, long, extended bullish divergent low. So that means that the momentum is moving higher, slightly moving higher, and price continues to move lower, telling me that a trend change or reversal is probable. It's not there. We don't see it yet in price, but it's probable. Now, if you look at the PPO, you can see that the blue line's starting to turn up. It's about flat, but it's not dropping anymore, and it looks like it's going to start to turn up. Price is also starting to turn up. So watch this, because if the PPO makes a bullish crossover, we keep that would be a confirmation basically on this bullish divergence. If you have bullish divergence on the RSI and then you get a PPO crossover, that's confirmation that, okay, this divergence is intact. And then typically price is going to, you're going to see that reversal at that point. So if the dollar moves higher, it's very likely gold could move lower and the markets could move lower as well. Okay, guys, sorry, I don't know where I left off. I had to take a call real quick. But I'm going to look at this BBY here. Someone left a comment about BBY looks like an interesting short, but it's really oversold, et cetera, et cetera. And the thing is, I would agree. I I wouldn't take a short in BBY right here. I think you've missed the boat if you're looking at taking a short. The reality is that the train left the station and you don't want to chase. You know, I don't chase. If something just sells off, I don't want to take a short all the way down here. Where I took a short was way up here. You had the gap down, you broke the trend line. See the trend line that I have marked out here on BBY? You had a reaction, 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 and then you broke it with an impulsive breakdown, a sell signal essentially, which was a gap down. And that's where I wanted to short at, and that's where I did short at. Now it's sold off, you know, and the thing's come down from the breakdown point. It's come down about 13 or so percent. Well, I don't want to short here. You know, this is where I would look to start taking profit. And again, I have a support line right here at 104.13. So you could have taken a little bit of profit there. We still haven't recovered it, so maybe we go lower. And ultimately, I think we head down to fill this gap. But it doesn't mean we're not, you know, maybe we move up first and make, you know, kind of make a counter trend bounce before rolling over. So that's just something I want to point out. You're at a, you know, it's a higher risk area because you're kind of right in the middle of where the most objective area to take the short is and where the ultimate profit target or price target is. You're right in the middle. So now it could chop up, could go down, might never get to the profit target. You don't know. And so that's just something I want to point out. Okay, let's look at NEO here. NEO still looks bearish to me, and here's what I see. We are, you know, here's your uptrend line, kind of the most recent uptrend line. There's two uptrend lines on this thing. The major uptrend line is all the way back here, and you can see that we've really come off of that to the upside. And then here's your secondary uptrend line. So we had a sell signal right there. I started shorting the thing a little bit early right in here because it looked pretty weak. I was just front running it basically. But your conservative kind of sell signal was right here. See that impulsive breakdown? And then you've had continuation. So you get the first leg down, which, you know, breaks down like that. And what this looks like is a counter trend rally. And basically, this is the, you know, we get a little bit of a bounce here and kind of flagging out is what it looks like, something like that. And then I think we continue down to the major trend line down here. So again, that's what I think this is going to do. If you look, if you look at the candlesticks, you can see we continue to just make lower highs. See, we had the counter trend bounce, and then this bounce here was lower. This bounce here was lower. The close was lower on this hour. So we're not able to really recover this resistance line up here, which is about 48.22. So yeah, a bullish break above that and close above that would be bullish. That would probably set this thing up for another leg higher. But until we get that, I see a downtrend where we're making lower highs and lower lows. So we've got lower highs. I think now we break to make the lower low down to this more major support line. And that's where I'll be taking profit on this thing. And then I would recycle back into a short if and when it broke the more major trend line with an impulsive breakdown. But until then, that should hold as support. Someone asked me if pins was a good short, and I replied that it's not, because here's the thing. You have a nice clean uptrend line on pins, and you have not broken that trend line support. So until you break down from that trend line support, it just doesn't, you know, this can continue to go higher. So you need to see that sell signal. If you look at the daily, yes, we do have negative divergence in the daily. See it right there as we start to build this negative divergence and the thing continues to walk higher. But until you see that breakdown of trendline support, you don't have a sell signal because this can continue to move higher and we can even burn through the negative divergence and make a new high. So again, negative divergence just tells you to be on the lookout for a trend, a sell signal or a trend line break. And then when you get that trend line break, that's the actionable event that you can take a trade on. Quick update on Snap. All right, so I think we're in the stop rate area. I think we're running stops here, but we have to watch the price action. We've got this trend line resistance right up here. We had a reaction here, reaction, reaction, and then a cluster, and then we broke to the upside. So that is a breakout. See that candle, but it's not impulsive. It's just a break, and then we've just kind of kept grinding around up here. On a bullish break, you usually want to see a bullish break and then continuation to the upside where buyers are stepping in. If you look at the daily volume here, you'll see here there's no volume on this breakout. So to me, this looks like stop rate action. They're running stops up in here for maybe a day or two, and then they'll impulsively break this thing to the downside, heading down to the bottom of this trendline support. And ultimately, I think we break all the, start to fill this gap. So I'm still short this. I think it still technically is sound. Now, again, if we start to break higher and, get daily closes that are above here, then I'll stop out because the technical picture will start to change. But look at the daily negative divergence. You can see the big negative daily divergence. This is divergent high price action. Divergent highs have a high probability of failing. And to me, this looks like stop rate action. So I'm watching for that breakdown or failure. If we don't get it, then yeah, it might be an opportunity. You might want to stop out of this thing. But again, it's not, it's only gone against the position. If you look, really from this point right here, it's only gone against the position about 10%. And for a starter short position, that's not too bad. And, basically, I always start with a starting short. I add to it as we go. I think I'm down about 6% on a position. I don't even have a full-size position yet. But if I get, at this point, I want to see that impulsive breakdown before adding to it. So I'm not adding any more to it. But if we do get that impulsive breakdown, I'll add to it, coming up to a full-size position. For me, a full-size position is about 5 to 10% of my portfolio. It just depends. I'll go heavier on the indices, like triple Qs or SPY, than I will on an individual stock, because individual stocks, you've got headline risk. They might get bought out by another company, or they might, there might be some positive earnings or positive report. So you don't want to be too heavy in any individual one stock. And you can, the indices like triple Qs and SPY, they don't have that headline risk. Okay, I don't see anything else going on this morning, so I'm going to leave it here. Thank you. Leave me a thumbs up, and I'll catch you guys on the next one.